Hello, and thank you for joining us for this World Council of Credit Unions virtual event, Transforming Credit Unions, Achieving ORM Maturity in the Digital Age. I'm Greg Newman, Director of Communications for World Council. Before we get started, please take a moment to click the interpretation button at the bottom of your screen and choose your language, English or Spanish, to make sure you can hear all of today's presentations in your preferred language. Tómese un momento para hacer clic en interpretación y elija su idioma, inglés o español, o para asegurarse de que puede escuchar esta reunión en su idioma preferido. Now, are you ready to transform your credit union's approach to operational risk management? Today, Gunpreet Kaur, Enterprise Risk Manager at Khalsa Credit Union in British Columbia, Canada, will explore the key facts, strategies, and real-world examples that could help your organization navigate ORM, as it's commonly called, with confidence and passion. In this session, you'll learn about understanding ORM maturity, what it is and why it's essential in today's digital landscape, ABC Credit Union's journey, a hypothetical success story illustrating the path from challenges to thriving ORM culture, and achieving the Utopian O-R-M Model, how to build a future-ready framework and implement actionable steps for long-term success. If any questions come to your mind during today's webinar, please use the Q&A button at the bottom of your screen. You can type them in there. I'll be asking them of Gunpreet as time allows at the end of the webinar. And I'm happy to now welcome in Gunpreet Kaur, who will take it from here. Gunpreet, thank you for being here, and the floor is yours.
Yeah, thank you, Greg, for the introduction, and thank you, WOCCU, for organizing this webinar. So without further ado, let's start with the presentation entitled Transforming Credit Unions, Achieving ORM Maturity in the Digital Age. Okay, coming to the agenda. So today we'll be covering the key stats, ORM hurdles, checklist, Utopian ORM framework, ORM maturity phases, and summary. So by the end, you'll have a clearer roadmap for integrating ORM into your organization effectively. Let's dive in. So first is the key stats in ORM. Setting the stage with key stats, let's talk about digital vulnerabilities. So as per the NCUA annual Cybersecurity and Credit Union System Resilience Report, in 2023, credit unions faced an estimated 25% increase in cyber threats compared to the previous year. And with this average cost of data breach exceeding 4 million, well, let's say that just ignoring ORM wasn't a viable option anymore. Second one is technology and transformation. So technology and transformation is like the use of artificial intelligence and predictive analytics has skyrocketed, with 40% of the institutions actively using these tools to manage risks. And we must realize that if we don't hop on this train, we would be left far behind, trying to spot the risks with a magnifying glass in a digital forest. Third is employee involvement. A surprising stat. Companies with engaged employees who are actively participating in ORM efforts see that 50% fewer incidents are occurring overall. So our ORM maturity journey will be about getting every single employee on board, from teller to CEO. And the last one is future ready frameworks. So finally, companies with an agile risk management models are 60% more likely to stay resilient against the future threats. And that's a dream for all credit unions, I believe, a resilient, adaptable risk management process that's always ready for whatever comes next. So let's have our first poll. I will request the IT to launch the first poll, please. Okay, I believe 75%. Oh, 77. Good. Okay, so the rating, when we talk about this, audience say that most of the current risk awareness and most of the organizations need improvement. Okay, interesting to note that. And more of the interesting facts are 16% say they are very high in risk awareness, 35% say moderate, and 4% say not sure. I'll just share the results. Okay, so again, moving on to our PowerPoint. So after this, when we talk about that, okay, we need the awareness. So let's shift our focus to the real world. In practice, we encounter significant hurdles that challenge effective ORM. These obstacles can slow progress, number one. Number two, strain resources. And if left unaddressed, can expose institutions to serious risks. Let's take a closer look at these real world challenges. So, hurdle number one is immaturity of ORM as a discipline. We talk about that, oh, ORM is relatively new, practices evolve rapidly, what works today might be outdated tomorrow. Hurdle number two is lack of risk knowledge across the organizations. Many organizations lack comprehensive knowledge about operational risks. For example, NFI faced a data breach because employees were unaware of the phishing risks, resulting in significant financial and reputational damage. Hurdle number three, vast scope and range of ORM. We know it covers a variety of risks that are constantly evolving, be it IT, be it vendor risk management, be it operations, banking operations, that financial institution operations. So, for example, here I can quote like a financial institution failed to monitor third party vendors effectively, leading to a compliance breach when a vendor mishandled sensitive information. Hurdle number four is resource constraints, and very common hurdle. FIs often operate with limited staff, making it challenging to dedicate sufficient resources to ORM. And hurdle number five is again very common. It's information overload. That is, organizations have difficulty in understanding any potential risk and effectively making decisions when one has too much information. So now I'm going to provide you with a checklist. As we go through this journey, think of the following checklist for your own organizations. Can we say check to each? Number one, do you have a risk aware culture from top to bottom? Are you leveraging the best tech available in risk monitoring? Do you have real time accessible dashboards that give your team a bird's eye view of risks? Number four is, are your KRIs updated regularly to match today's digital landscape? And the last one, finally, is your ORM system agile enough to handle tomorrow's challenges? So keep that checklist in mind as we dive in and learn how to transform our credit unions and reach that utopian ORM maturity. Moving on. So now when we talk about the utopian framework, we'll be beginning by visualizing an ORM maturity model. That is, we'll have some stage set where we want to reach as an ORM matured organization. So it's a continuous learning, continuous improvement, but a utopian model framework is the model which envisions an impeccable, highly efficient system where all the aspects of risk are managed seamlessly. So, at the center, we observe a holistic risk culture. At the top, financial institutions use advanced analytic tools. To the right, ORM is no longer siloed but integrated across all business functions with shared ownership for risk. At the bottom, financial institutions adopt an agile ORM framework that adapts quickly to evolving regulatory market conditions. And finally, on the left, financial institutions maintain transparent and strong partnerships with regulators, exceeding the compliance expectations while fostering trust. So, in the summary, ORM Utopian model anticipates and mitigates the risk before it becomes an issue, thereby creating an operational an operational environment which is nearly risk-free. So from now onwards, we'll be uh, focusing on the phases to the maturity. And remember, the phases are interchangeable and can go hand in hand depending on our organization structure and the culture. But before that, let's launch the poll number two. So poll number two is, which of the following maturity at your organization? So real-time dashboards for risk monitoring, more frequent risk training for staff, scenario testing and simulation exercises, increased leadership involvement in risk initiatives. Very close, very close. I'm loving to see the trends. Okay, so I'm going to share the results. Which of the which of these would help the ORM maturity in your organization? Oh, it's like real-time dashboards for risk monitoring. Very true. That has got the highest votes. More frequent training for staff, 24%. Scenario testing and simulation, 19%, and equally is the share for the increased leadership involvement in risk initiatives. Very interesting and very true results for the poll. Okay, so again, I'll share the screen and we'll move on. So now when we have talked about this and we have got the most of the votes for the risk dashboards, but we'll start with building a risk awareness culture in our organization. That should be the phase one for the for the starters. So let's begin with the story of a medium-sized credit union. Let's say the name of the credit union is ABC Credit Union, which was doing what it did the best, keeping things simple. Number two, focusing on members. And number three, surviving in a rapidly changing world. But the digital age has hit us all like a tidal wave. And it turned out that things that like spreadsheets and gut feelings are not enough to handle the operational risks anymore. So leadership recognized that reaching ORM maturity required more than just the procedural updates. It demanded a cultural shift across all levels of the organization. So when we are talking about the risk awareness culture, first is comprehensive training initiatives. So ABC Credit Union conducted risk awareness training for all staff, ensuring every team member understood how their roles were linked to potential operational risk. So this is very important. These sessions didn't just focus on the technical aspects of the risk, they emphasize the responsibility of all individuals so that they can keep the organization secure. And the next one is leadership engagement. So training wasn't enough. To lead by example, senior executives frequently communicated the importance of operational risk management across all levels. They sent regular updates and encouraged transparency in discussing potential risks. Additionally, ABC Credit Union established a reward system because, when we recognize the employees who demonstrate exceptional vigilance and initiatives, it is a good motivator. So, this not only incentivized active participation, but underscored the value placed on a collective effort towards maintaining a secure operational environment. So, what was the outcome? Improved risk management practices and a culture of shared responsibility. So, so first phase was building a risk awareness culture, and now the second phase, it's leveraging advanced data analytics. So implementing advanced data analytics is the phase two, and now the next chapter was unfolding. The institution embarked on a transformative journey to implement advanced data analytics. How did it do that? Number one, deploying AI and machine learning for real time risk detection. So, we can here talk of a very common example like deploying AI and machine learning tools for real time monitoring of transaction data. So, within weeks, ABC Credit Union system identified unusual patterns in few member accounts. A very common example, frequent small transactions followed by large withdrawals, a known indicator for money laundering. And the AI system flagged these accounts and immediately alerted the compliance team. This shift to real time analysis not only improved fraud detection but also allowed the credit union to respond proactively, demonstrating the tangible value of AI driven risk management. Number two, is centralized data repository, which most of us are missing. So I'll just talk here just in a layman's language, and then we can talk more about it when we talk on the GRC section later in the later slides. So imagine a credit union like ABC as a large house with many rooms, and each room represents a department such as compliance, IT, HR, finance. So traditionally, each room had its own locked filing cabinet to store information. And this setup made it hard for everyone to share important details when needed. For example, if the compliance team noticed like there are repeated regulatory breaches and wanted to adjust policies, they had to request data from others, which took time and effort. So, to fix this, ABC Credit Union built a single, well organized library, a centralized data repository right in the middle of the house. This library holds all the important information from each department in one place. And this information is organized like a bookshelves where everyone with permission can access the data they need without running around the house. So that is how the centralized uh, data repository should look like. Third one is harnessing predictive analytics to foresee potential risks. So when we are talking about all the data analytics, this is really important. ABC Credit Union started using predictive analytics to predict problems before they happened. Think of it like using weather forecast to decide if you need an umbrella. So, by studying trends in the economy and how members use their accounts, ABC Credit Union could spot members who may have trouble paying back their loans in the future. So, let's take an example. Suppose if a member, his spending pattern changed or the savings dropped significantly, the analytics team flagged them as potentially at risk. The credit department then reached out to offer help like adjusting repayment loans or suggesting budgeting tools before the member missed the payments. So this way, ABC Credit Union could avoid loan losses while showing the members that they care even in the tough times. So win-win on both situations. And the last one, which we miss sometimes, it is monitoring and updating KRIs for continuous improvement. So ABC Credit Union's risk team conducted quarterly reviews of key risk indicators. They added new indicators to address emerging risk, regularly updating KRIs, ensure that CU's risk management stayed agile and responsive to the new threats. So basically, in data analytics, we have observed we need AI and machine learning. We can't hop off. Second is centralized data repository. Third is predictive analytics. And fourth is updating the KRIs. Moving on to the phase three. This is very doable. This is enhancing risk management through cross functional collaboration. So, in this phase, what happened? Credit Union CEO Emily recognized that to stay ahead in a rapidly changing industry, they needed to enhance their risk management practices through better cross functional collaboration. Emily's first step was to establish cross departmental risk committees. These committees included representatives from all business units. By bringing together diverse expertise, the committees could tackle risk from multiple angles, ensuring comprehensive oversight. The regular meetings of these committees fostered a culture of shared responsibility and collective problem solving. So, like, what can we do? This collaborative approach to risk management could significantly enhance credit union's reputation for reliability and security, thereby attracting more business. So, because members and partners are likely to trust an organization that demonstrates a proactive and cohesive approach to risk. We should keep this in mind. Next is point number two. To further integrate operational risk management practices, the CEO focused on breaking down the silos that had long existed between the departments. She encouraged open communication and collaboration, ensuring that all functions were aligned in their approach to risk. And point number three, Emily also mandated that risk assessments be conducted for all major projects and decisions. This became a standard part of the project planning process, embedding a proactive risk management mindset within the credit union's culture. For example, when introducing a new mortgage broker channel, comprehensive risk assessments were performed. Why? To identify potential financial and operational risks. And this included evaluating brokers' compliance with the regulatory environment and assessing their financial stability and ensuring that their practices align with the credit union standards for ethical behavior. So, by implementing these rigorous assessments, the credit union was able to mitigate potential risks and maintain a high level of trust and reliability with its clients. So, what was the outcome from this? Emily's vision had come to life, proving that with right strategies and a culture of collaboration, shared responsibility could lead to success. So, in phase three, which is, I don't think, will be any costly affair. So, not at any extra cost. We just need cross departmental collaboration, break down the silos between the departments, and embed risk awareness in decision making. Moving on to the next phase, that is phase four. Here again comes the technology. So, building a flexible and scalable risk framework. So, here, by adopting cloud based and proactive risk management practices, ABC Credit Union strengthened its ability to adapt to a dynamic risk landscape. So, first one is agile risk uh, management for swift compliance. So, as new regulations emerged, ABC Credit Union adopted an agile risk management framework to quickly adjust and ensure compliance. And we'll go through this in details in the next slide. Second is scaling with cloud based risk solutions. So, who doesn't want to grow? Everybody wants to grow. Everybody is like when the credit unions grow, they need the softwares which are scalable. So, ABC Credit Union was facing challenges in managing risk and compliance as it grew. The manual processes were becoming slow and difficult to keep with, and especially though when during the high demand periods like year-end audits. So to solve this, ABC Credit Union decided to implement a cloud-based GRC solution, that is governance, risk, and compliance. And this system helped the credit union scale its risk management processes efficiently without needing a big investment in new infrastructure. So, how did it help? Number one, centralized risk data. All risk related information like compliance requirements, audit reports, incident logs, vendor risk management, that is the contracts, were stored in one secure cloud-based system. Team members from various departments who had the permission could access the data anytime and from anywhere. Number two is automated risk assessments. So the system automatically updated risk assessments based on new data, such as changes in regulation or member behavior. And this saved time and reduced human error. Number three is real time reporting and alerts. So, cloud based solutions provide real time reports and alerts, allowing credit union to monitor and respond to risks as they happened. For example, if a new regulatory requirement was introduced, the system instantly notified the compliance team and triggered an update to the policy. And coming to the step three here in the risk management framework, proactive scenario testing to build resilience. So, I'll take an example here. So, to prepare for the possibility of a major cyber attack, what ABC Credit Union did, it introduced annual scenario testing. So, in a recent exercise, what they did were they simulated a ransomware attack that affected multiple systems. Now, again, the cross-functional team collaboration comes into place. The tests involve IT, compliance, branch operations, and member experience teams. So helping each unit practice response protocols and develop clear member communication strategies, very, very important. So here, the scenario testing exposed gaps, which were subsequently addressed, leaving the credit unions better equipped for future incidents. So, what was the outcome? Through these digital forward ORM practices, ABC Credit Union achieved greater maturity in their risk management capabilities, and this proactive agile approach to ORM not only minimized risks but also bolstered what? Number one, member trust. Then, making number two, credit union secure and resilient and tech savvy financial partner in the community. Now we'll be talking of agile ORM framework, which I just gave a highlight in last slide. So it's a fancy name, and many people, when they see it, um, they just relate this to IT. So, but now today we'll be exploring it with a different example. I'll not be sharing an IT example because there are a lot of IT examples for agile ORM frameworks. We'll discuss high risk client monitoring in an agile risk framework. So, number one is proactive risk identification. So, ABC Credit Union identifies an increase in high risk clients stemming from a surge in new account applications from politically exposed persons and businesses operating in high risk sectors, for example, the money service businesses. And through enhanced due diligence, the compliance team flags inconsistencies in documentation, and unusual transaction patterns and affiliations with sanctioned entities. So, what happened in the next stage is the prioritization of risk. The risk management team convenes to assess the urgency of addressing high risk clients. A task force prioritizes updating risk assessment models to incorporate new indicators for identifying PIPs and high risk industries. And this includes prioritizing accounts with high transaction volumes or international remittance activities. Number three, the most important, strengthening internal controls. The task force implements stronger internal controls, and we all know which controls are there. Should be number one, should be enhanced screening. Number two is EDD, that is enhanced due diligence protocols. Maybe something like a multi-layered EDD checklist is developed, ensuring comprehensive client profiling. Number three should be the access controls, that is role-based access controls to the sensitive data. And number four is approval process, that is high-risk accounts are subject to the dual approval by senior compliance officers before onboarding. Next is uh, real-time monitoring. So real-time monitoring is established using advanced real-time monitoring systems, as we discussed in the previous slides. That is, we need automated alerts uh, which flag the transactions involving high risk jurisdictions or exceeding predefined thresholds. Geolocation tracking of transactions add an extra layer of scrutiny, and dashboards, which provide the compliance officers with live updates on flagged transactions, enabling immediate intervention. And now coming on to the next phase, and this is incident response. So in this example, the incident response can be how the IT and compliance team work together. We can divide this into 3 weeks. Week one, they deploy an interim filter update, flagging transactions involving high risk accounts. Second, after identifying week two, after identifying like the pattern of false positives, they can compliance team again collaborates with IT team to refine monitoring rules. And week three is scenario based training for staff, including simulations of handling flagged accounts. So, in this, if there is an incident debriefs, identifies gaps in response protocols, which are then addressed with revised guidelines. And the last, and again the most important here, it's nothing without risk culture and leadership. So, ABC Credit Union's leadership plays a pivotal role in embedding a risk aware culture. How? Number one, board of directors. They oversee regular updates on high risk clients, high risk members, monitoring metrics, and ensure adequate resource allocation. Number two, monthly meetings between compliance, IT, and operations, which ensure alignment and foster cross departmental collaboration. And number three is senior leaders publicly endorse the importance of vigilance and high risk client monitoring, reinforcing accountability at all levels. So, what will be the outcome of this? So, through agile risk management, ABC Credit Union successfully mitigates high risk client exposure within 3 weeks, and the updated framework leads to a significant reduction in the false positives. Next, enhance staff confidence in managing those flagged accounts. And number three, strengthen controls that adapt seamlessly to the regulatory requirements. So we talked about regulatory requirements, and this is the phase five, strengthening regulatory compliance. So to ensure robust regulatory compliance, ABC Credit Union honed its focus on these four critical elements. Number one, prioritizing regular communication with regulators. Maintain open, proactive communication channels with regulators, which can become the cornerstone of the strategy by staying ahead of regulatory updates, compliance requirements, and expectations. So here it's be proactive rather than reactive. Second is automating regulatory reporting. It's very doable. Credit Union, ABC Credit Union faced challenges with manual preparations and submission of regulatory reports, given the complexity of different reporting requirements and tight deadlines. So, to address this, they use the digital regulatory reporting tools, which help them automate and streamline the entire process. Third is periodic audits. So, they were integral to identifying and addressing compliance gaps. So these reviews ensured policies and procedures were always aligned with evolving regulatory frameworks, safeguarding the organization from potential risks. And the last one is establishing a culture of compliance. So beyond tools and audits, the institution embedded a compliance mindset within its workforce. So not only sales, but also compliance through regular training, clear communication. Employees at all levels understood their roles in maintaining that regular regulatory standards. Moving on to the next one. Here I'll be giving some tips for the credit unions who are smaller sized and who can work to make their ORM mature. So here, ABC Credit Union knew they needed to advance their ORM practices to stay resilient and compliant, but wanted to do so without stretching their budget more. They already had invested a lot. By promoting continuous learning, implementing practical review process, and leveraging free resources to monitor industry trends, they created a sustainable and affordable ORM program. How to do that? Number one, cost effective learning and development. So, the credit union aimed to keep the learning process engaging yet affordable. What did they do? Instead of bringing in external speakers each quarter, they leveraged the mix of internal experts and free guest webinars provided by the Credit Union Association. Employees were encouraged to access self paced online modules and recorded sessions from industry conferences, fostering a culture of continuous learning without expense of recurring in-person training. And second one is staying ahead on industry trends with affordable resources. So to keep informed about emerging risks and changes in regulations, ABC Credit Union subscribed to free newsletters and regulatory updates. They designated a compliance officer to summarize these trends for leadership monthly. And what else? The credit union encouraged key members to attend free online webinars and virtual conferences, keeping their industry knowledge current without requiring costly travel and attendance fees. So before we summarize, I'll just stop sharing and launch the last poll. So, how would you describe your organization's approach to adopt new technology for ORM? Early adopters, we are always looking for the latest tools. Interesting. Steady pace, we update as needed, most of them. Then cautious, we wait until technology is well proven. And resistant, we prefer traditional methods. I'll just stop in another 10 seconds. Okay, so I'm ending the poll and I'm sharing the result. So here, as we see, we have the highest votes to the steady pace. We update as needed. Very nice. And we have a lot of early adopters as well. Interesting to see. We are always looking for the latest tools. We have certain cautious as well. We wait until the technology is well proven. And we have few resistant as well. We prefer traditional methods. Thank you for the results. Okay, and now I'll just share the last slide. Summary. So, what are the key takeaways? So, when we talk of ORM maturity, our first mindset goes to the technology. But no, it is more than technology, it's about culture. So, what should we have? We should have proactive risk management. We should anticipate risks, don't just react. Next is continuous learning. We should build a resilient workforce that adapts to the change. And third is collaboration. We should foster cross departmental alignment and teamwork. When we talk of the vision to reach that maturity level, the credit union, we should believe in a credit union where risks are managed and anticipated, technology empowers smart decision making, and member trust is strengthened by resilience and adaptability. Next one is what's your challenge? So take one bold step this week to advance to ORM maturity. The first one is a bit hard, invest in tools. Can't be done in 1 week, but start thinking about it. Real time risk dashboards or automated GRC systems. Second and third are doable. Review policies, ensure they align with your strategic goals. Start the conversation, encourage collaboration across the teams. And what's the future? Let's shape a world where operational risk becomes a strength, not a burden. Together, we can build stronger institutions, empower our teams, and deepen member connections. That's all. Thank you so much for your patient listening, and the floor is open to the questions.
Yeah, thank you, Gunpreet. Great presentation. I got a lot out of it too, even though we don't work at a credit union. Operational risk is one of those things I think any organization should be aware of and should be paying attention to. If you do have questions for Gunpreet, put them in the Q&A button on the bottom of your screen. You can find the button there and then you can type them in. We already have a couple that are here. Nicole asks, how do you get senior management to put risk and compliance first? They focus on being reactive rather than proactive. If risk and compliance make things difficult for member service staff, it goes to the bottom of the list.
Yeah, I totally agree with Nicole. And you know what happens is risk. Basically, what when we talk about risk, we talk about the technical aspects of the risk. I think just breaking down into the simpler pieces and then talking to the management and making them aware of the other side as well. It's not that we are stopping sales anytime. We are just talking about something. We are working in a highly regulatory environment. So it's more of interpreting that and telling them in a simpler terms. I think that helps a lot in making the management understand the other side of the story. And also, if the management can come forward and you can have monthly discussions in your executive meetings regarding that, that helps a lot as well.
We've got a couple questions about software. Keith and one other wondering, um, what are some of the software tools you can help identify to help a credit union out? And also, what AI tools, if any, can you recommend?
Uh, I don't want to recommend any particular tools we are using. It's just that I can give you a high level knowledge. So, the software tools, there are now many firms who are providing ready to use software solutions. Just talk to them, see how your organization will fits in that. And also very importantly, which we did was we did the search for 1 year, and we also did good bargaining because we were not a very, like, a big size credit union, couldn't afford that much. And you will get very good solutions. You can get all in one solution. It's just the patience, and have something like a budget set in your mind, and you'll get that very in a good manner, because there are too many solution providers in the market. And for AI and machine learning, what I what we did was we already had something set up, and we requested our provider that, okay, rather than we looking into the market for other tools, it would be better if we can provide you some additional, and you can upgrade the AI and machine learning in that, because already your system knows a lot about what we are, like, it's already learned, so it's just the upgradation. This is how we started. But again, we are also, as credit unions, you have to look for a lot more partners. But what we how we start is we first see where we are. Can we just, like, climb one ladder up and the system, like, it will work, or we need to look for totally another vendor? So this is where you need to, like, ask yourself.
Charlene asks, how should a credit union go about developing a risk register?
Oh, so honestly, risk registers should be more of how confident are you in getting, you can say, the answers, or getting it filled from the your other departments. So the risk registers are simple. So it is basically, you start with the risk universe, and then you drill down. Like, if you see there are certain risks: credit risk, operational risks, strategic risks, and then you have to drill down with each risk in a risk register, put the likelihood, the impact, and get involved the risk owners, basically the other departments, and document it properly. And you can also look on, there are too many samples or templates available. Chat GPT provides the best. You can have any, which suits your organization, you can redesign that. So this is how, and you have to document it and store it, which is very important.
Martha wants to know if you have a recommended template for a risk management dashboard.
um so I I don't have a recommended template, but ideally, what I would like to see in the risk management dashboard should be your prioritized risks, which are highest rated. It should not be all the risks. Just prioritize your highest rated, which have the highest inherent risks. Then your controls should be there on the dashboard. Do these risks have good controls? If not, then those controls should be red or orange, whatever ratings you give. And then there should be some mitigations as well. So this is how the ideal dashboard should look like.
I'm curious if you, when you look at these poll results, do they line up, I guess, with where your expectations were in terms of readiness, in terms of resistance, or in terms of like enthusiasm, in terms of getting ORM and implemented into your credit union?
um, Two polls aligned, but one poll didn't. So when we talk about ORM, actually, this is the mindset. We just talk about technology. I thought that the first thought should be given to our risk awareness culture when we talk about ORM, because it's just not upgrading everything instantly. It's first building that mindset, incentivizing people, making them learn how their roles and responsibilities are linking to the risks. Then only, when you start bringing up new systems and people know from within their mind that, okay, this is my job responsibility, here's this is the risk I'm facing, this is how I can mitigate, that mitigation is much better than what we just see on the dashboards.
A lot of people have just put in some comments telling you that this is a great presentation and very critical knowledge. I don't see any more questions from the group. Is there anything you want to add before we close, Gunpreet?
Uh, just the gist. Do the right things, report the wrong things, and um, try to. If there are risk people in this, I would love to say that try to make your environment more risk aware. So that's it. And I'm very thankful because I could see good participation, and it was really awesome. So thank you, WOCCU.
Well,
Thanks to the
thank you.
participants.
Thank you, and thanks to all who joined. Almost no one dropped off this entire hour, so that is always a good sign. You really kept their interest. If you
Oh,
like this webinar and you want to watch it again, or you'd like others to see it, you can refer them to the World Council YouTube channel. That's at youtube.com/WOCCU. It will be available there by early next week. And if you want to participate in other great educational sessions in person, we're happy to let you know registration for the 2025 World Credit Union Conference is open. World Council will be hosting the 20th anniversary of the premier global credit union event in beautiful Stockholm, Sweden next year from July 14th to the 16th. You can simply scan the QR code on your screen right now. If you don't have your phone handy, head to wcuc.org to learn more and register for what promises to be a historic event. We'd love to see all of you in Stockholm next summer. That's it for today's webinar. Thanks for joining us, everybody. Have a great rest of your day.